Hello and welcome to the Business of Betting podcast. Today I'm joined by Dan Kustelski, the CEO and co-founder of Chalkline Sports. Dan, thank you very much for coming on. The Business of Betting podcast is proudly brought to you by the Betfair Hub from Betfair Australia. No matter where you are in the world, if you want expert articles from pro punters, from building automated models to betting psychology, check out the Betfair Hub. betfair.com.au/hub. Gamble responsibly. Today I'm joined by Dan Kustelski, the CEO and co-founder of Chalkline Sports. Dan, thank you very much for coming on.
Hey, Jake, thanks for having me on, man. I really appreciate it.
So it's good to have you back. This is round two, and it's been a while since round one, so there's obviously plenty to cover, and you're as good as anyone to talk about some of the topics we're going to cover today, but obviously it'd be great for those listening who need a refresher on Chalkline Sports and on you. Just give us that background. Sure.
So started out in the U.S. Army and then went to South Africa and was working in sports marketing in the lead up to the 2010 World Cup, where I was working for a marketing agency and had an opportunity to go to the client side. And so I started working in iGaming and sports betting in 2009. We launched a sports book from scratch, built our own software in 2009 and in South Africa. And then ended up selling that sports book. It was called VoltBet.com. And we ended up selling that sports book to Sun International in 2013. And I stayed on for, probably a couple of years and then moved back to the United States in 2015. And pretty soon after I got back, I was working in the online horse racing industry for an ADW here. But passion was always around sports betting. And so, the tea leaves were all pointing towards legalization. And in 2016, my brother and I and my partner from South Africa got together and we really came up with the concept of Chalkline, which was completely B2B business, and really just help the operators. Help media companies build a database of sports bettors or potential sports bettors, and we do that with we've got a platform that we can license out, and that platform it builds free-to-play sports betting games. We bring in all the Sport Radar data pre-match, and we can create hundreds, thousands of games. Last year in 2020, we built 6,000 unique games for our 20+ clients, and we were our games were played 5 million times, and just helping those operators build a database and acquire customers.
So you may not remember the specific timing, but last time we caught up for this podcast was October 2017. And I'm certainly not going to ask you to sum up what's happened in that time, the preceding time to today, and in 90 seconds or anything crazy like that. But I do want to pick your brain on 2020. Obviously a strange year across many, many things, including and obviously sports and sports betting and even iGaming. But how would you describe the US market in 2020? Because it's depending on where you sit and how you view it, it could be very, very positive. It could be, obviously some negative components that come with COVID and the impacts. But what strikes you as most compelling as a storyline from 2020?
So when I look back at 2020, I mean, I'm a glass half full kind of guy, and when I see, in the bigger picture, I saw so much enthusiasm for sports betting, that we just hadn't seen in the past. That's leagues and teams leaning in and selling sponsorships to various operators. That's operators doing deals with media companies. The Points Bets and NBC and Barstool and Penn National. Lots of discussions around investments. The share share prices of a lot of these organizations in April were pretty low, to roar back to life by the end of the year. Entities are looking to list the Genius Sports SPAC and the Rush Street Gaming, and so certainly when I look at 2020, it felt to me like, and having lived in a country where sports betting is mainstream, I will say that it was certainly one of those years where sports betting it felt a lot more mainstream than it had in the past, and I can't help but think that some of the challenges around the pandemic might have actually accelerated that.
So, are there any bear cases out there? Because I don't read many or see any. I don't understand all of the hype necessarily, but I can gather why it's the case. And obviously, guys like you have been doing this for a lot longer than the legal industry in the US has expanded since May of 2018. But are there any sides of the business that aren't looking strong necessarily, or that need a jolt? Or is it really that we're going to have more states, more access to users and new users for a lot of these businesses, and there's obviously some structural things to shake out per state, but overall there is plenty of reason to be positive?
Yeah, I would agree with that. I would say that if I'm digging around and just maybe looking at some challenges that might exist, I look at states that have really only legalized retail. Friends of mine are trying to talk to Mississippi and getting them to get to legalize mobile. It just feels like those states are going to get left behind pretty quickly. For tax revenues, operators that are in there, they can't not operate and be in those casinos and those retail outlets. But states like New York, if they want to if they want to earn significant tax revenue, like New Jersey did over for 2020, I think they earned $300 million in tax revenue. If they're looking to fill some of those holes, they've got to consider mobile and online sports betting, and then the next level, and this is maybe where New Jersey's a little bit of a case study, is that iGaming component.
So you are truly an expert. You're not an expert that you've gathered all your experience and expertise in the last 6 or 8 months. You truly have the background and the CV. So I'm curious, how do you look at New Jersey? Because everyone often will want to talk about New Jersey, and they've done the sports betting side, they've done the iGaming, and they really are leading the way in many and most metrics. Just tell me about how it's gone and how you expected it to go, and what you've learnt from the New Jersey market overall, because I think the end of 2020, one of those months that we almost got up to $1 billion in handle in 1 month. Amazing. So it's a serious player in the global betting markets, even though it is I think under 10 million people and so on.
Yeah, that's right. If I do think that there's some exuberance around the hold versus handle discussion. I think I heard somebody from West Virginia, one of the congressmen, say, handle is the driving, and the hold is the putting. You drive for show and you putt for dough. I think that we get wrapped up around this $1 billion, and it is kind of interesting to me, but it's really underneath what kind of the sub metrics of that. When I look at New Jersey, and I see that almost 1 out of every $2 that is earned by a land-based casino or a gaming operator is from sports betting or iGaming. That is a really interesting stat, unheard of. If you think about like sports betting in Nevada, for the longest time it was maybe 1 or 2% of the total GGR for Nevada. Whereas now you've got these alternative forms of gaming that are just massive growth opportunities, and almost propping up the decline that a lot of these casinos have felt throughout COVID. So That to me is really when I look at it. The whole mobile retail is a moot point at this point. I think it's 93 or 94% of the state is mobile sports betting. But then if you dig into the sports betting numbers, one out of every $2 in the that was earned by the sports books was done on off parlays. So the sports books are making half of all of their GGR on these parlays, which are notorious. They're casual bets. They're really just a fun way to wager. They're getting wrapped up around whether it's minus 105 or minus 110. Not really part of the gamblers that wager on the parlays. But that's really interesting because we're 2.5 years later from legalization of sports betting, and for the entire year of 2020, for it to still be in what I'm reading from the data is that there's still a bunch of casual bettors in New Jersey, and what I'm also saying is that as these other states have legalized and they're at a much more infantile stage of their sports betting lifespan, it's just a casual market, and operators, software providers I think are really trying to figure out, how they can appease that. And the last thing about New Jersey is really that, we're probably only sitting at about 40% of its full maturity. So there's another 60% of growth, I think, approximately, that we're going to see out of New Jersey. So these massive numbers, and eclipsing Nevada. Nevada's only got a couple million adults, or 3 million adults. New Jersey's got quite a few more. But I mean, to think that a billion a month it's a huge number. But I mean, it could 3 billion to me is probably where we're gonna start seeing New Jersey in the next 2 or 3 years.
That is wild, because a lot of the pundits looking at the industry, certainly in New Jersey, weren't necessarily predicting that at this rate. And as you said, we're not at maturity. We're clearly in the growth stage. At what point do we get to start talking about sustainability in New Jersey and other markets as well, once we get towards or closer towards maturity? Because I think sustainability is going to be a question that operators are going to have to tackle. Not today necessarily, but I think at some point, because there's going to be a lot of competition in states like New Jersey, and just figuring out ways to have a sustainable sports betting ecosystem, which obviously is highly reliant on the players. Do you think that's coming here soon, or do you think we're still in the growth mode and we'll be there for a while, and we'll get to that conversation at another time?
Oh, you bring up such a great point. Yeah, I do see the world in the following two metrics: how much does it cost to acquire a customer, and how valuable is that customer? And so if you're spending more than that customer is worth, that's clearly the way to have a death as a business. But I do think that what happened this year in 2020, I think that there's enough exuberance in the market where and capital coming into these operators that allow them to continue to spend $1,000 per new depositing customer, and find out whether or not those operators can squeeze $1,500 or $2,000 in customer lifetime value over a period of 18 months or 2 years. I don't think we're at the point where sustainability matters just yet. I think it's really hard sometimes to compete with the big people who are spending $200 million a quarter on marketing. I mean, it's just hard to compete. But I think that's where when when I think of sustainability, I think probably more of just surviving. Like if books, that maybe just don't have the budget, they just need to figure out how to survive, how to acquire customers at a cheap rate that makes sense, that fits into their balance sheet, and that's a great business. I mean, having 5% of the New Jersey market is a very it's a very valid business, as it would be in most states, 5% of any of the states. But I don't think I think that there's still enough money coming into the industry that it's really still about, just acquiring customers and splashing money around to build a brand and to build that database than it is whether or not I'm profitable as a business.
So New Jersey is one state, Pennsylvania another, Michigan, these type of states with the online gaming component, the online casino, and not just the sports betting. It seems to be rarely discussed for some reason, given how strong of a hold it has on the business so far. And a lot of people like the splashy sports betting numbers and the NFL betting and things like that. But take me through just the impact that online gaming has had to this point in a very limited number of states, and maybe what progression you see from that, just given how successful it's been so far.
Oh yeah. Roxy tweeted something out in August, and Roxy Roxborough, and I mean, just a legend in the sports betting industry. And he says that everybody's going to figure out that sports betting isn't about sports betting; it's actually about creating a business with a higher multiple to be either bought or leveraged by another for another purpose. So everybody just needs to get used to it, and I mean, just sage words, on a random tweet on the Twitter machine. But yeah, I can't help but think that, as Michigan goes live with online gaming. I mean, already this year, more higher GGR in online gaming than there is online sports betting. And granted, there was a period there where we didn't have any sports, but it's really all towards that. And when you look at New Jersey, I think the GGR out of New Jersey for 2020 in sports was, close to 400 million, and it was almost $1 billion in online gaming. And so, those the opportunity, and when you look at Rush Street Gaming and you read some of their perspectives and their quarterly reports, they're all in on iGaming, slots, casinos. How do we really, not necessarily use sports betting, but just use it as an opportunity to bring people in on the cheap, and get a customer lifetime value. And some of the customer lifetime values that Rush Street were talking about were $5,000 or $6,000 per customer. When when Golden Nugget in their SPAC documentation, probably 5 or 6 months ago, they were talking about a customer lifetime value of $7,000 per customer. So you can imagine that there's a lot of loyalty in New Jersey, but also there's just a lot of value to be had if you've got a good mousetrap for online gaming. It almost feels like the DraftKings and the FanDuels are probably going to be probably pretty soon are going to be making more of their money in online gaming than they will be on sports betting. But sports betting and DFS and horse racing, these are all great, mousetraps to catch people and to collect gamblers and then push them over to higher margin verticals.
So we last spoke late 2017, and if I had said to you, tell me about Penn National Gaming and their trajectory and how they're going to attack the market, I would have been surprised if you mentioned the word Barstool. And if you look at how much FanDuel cost when they were acquired by the Flutter Group, you would have said that valuation means they're not going to necessarily have a strong voice in the sports betting discussion, at least not immediately. And obviously what MGM has done with the old GVC, Entain and DraftKings with the reverse merger and SB Tech component there. And my thesis here is that things haven't necessarily gone as people would have suspected and predicted, and even though everyone seems to be experts and everyone gets everything right, I do feel as though at the time these were sometimes unusual outcomes that have proven to be shown that all the experts aren't necessarily experts. So Just tell me about your perception of some of the brands that have entered the US market, either domestically or some of the international ones, and how that sort of rat race has played out over the last couple of years.
Yeah, I think, I think that when you've got Caesars buying William Hill, and as I understand, I could be corrected, but I think they're going to let the European stuff go. Like they were literally just kind of buying William Hill for the U.S. asset. I mean that's pretty, that's a seismic shift in the online gaming industry as a whole. I mean MGM even putting in a bid for Entain is really interesting. Um, but I think you know what it all comes down. It all really does come down to acquiring customers, and so when I if let's use the scenario of 2019. 2019, we actually were working with Barstool. We actually did all of their free to play for that NFL season of 2019, and so we saw the numbers and of engagement, the amount of engagement. And this was a live and play free to play game that we ran for Barstool. Launched on the first day of NFL season in August and ran it all the way through till January, and they had some amazing engagement. And so and I talked to some of the operators, and I was just like, hey, have you guys seen some of these numbers that Barstool are doing? And a lot of people, there were some operators that were actually advertising on this platform that we had created, and they saw the numbers, and they knew that it was pretty impressive. For them to parlay that into $450 million valuation is pretty impressive, considering that a year prior they were sitting at about $100 million valuation. But it's that, all of these deals, ultimately, all of these deals are really about acquiring customers. If you're PointsBet, you do a deal with NBC, and that's, you're exposing, you're getting access to, millions and millions and millions of eyeballs. And now obviously there's a massive challenge to the thesis on whether or not, that's going to translate into market share. We don't know. There's, Fox Bet, everybody thought that Fox Bet was going to be this massive entity, but I don't think we've necessarily seen all of that engagement translate well into a sports book. But yeah, I just can't help but think that these deals that are being done, and Paddy Power, hats off for them buying FanDuel at whatever $460 or $490 million. They bought a brand, a well-established sports brand, and they have done really well with with that. When they bought TVG prior to that, again that was pretty savvy move, moving up to legalization in the United States. But I think we're going to see some strange bedfellows. And that's just simply because we're going to see some European. I think we're going to see some European operators come in. I mean, there's a handful of them that have already, Betson. If you're living in the United States and you've never been, to Europe, you might not know who Betson is. But I mean, pretty decent sized business. Bet365 is kind of lurking thereabouts. They've got a license tied to one of the New York casinos. Tabcorp out of Australia. So I mean, there's some big brands that still haven't kind of descended yet, and they're going to be looking for partners. Who knows what those partnerships are going to look like? But I mean, no one really thought that Twin Rivers would turn into Bally's, would buy BetWorks, and then sell 5% to St. Clair, and turn all of the Fox Sports networks into Bally's sports networks. I mean, nobody anticipated that. Or Hard Rock. I mean, Hard Rock are now, as we speak, I mean, they're building a massive team, down in Florida to really enter this U.S. sports betting industry and online gaming industry, probably globally as well, because they've got a great brand. I think it's really about I don't mean to be too basic, but it's about acquiring customers at little and squeezing value out of them and on customer lifetime value at its core. Now those are done in hundreds of millions of dollars of deals, but that's where I'm looking when I think about the next few deals that are happening. How do I get access if I'm an operator? How do I get access to a lot of eyeballs that I can convert?
Yeah, And I get the sense that there's still a bit more to play out in this space,
Oh,
or
without a doubt. Oh,
we're
so
only in the
young.
first inning, to do a
I
sports
know.
analogy, just because so many more states, including the big four, obviously with Texas, California, Florida, and New
Oh,
York to come, as well as all the operators that are sitting on the sidelines. Whether it is, some would argue
correct.
Bet365 are doing that now. We've seen some interesting things happen. Obviously, Tipico came over recently here in New Jersey. We've
That's
seen
right. Yeah.
Fubo
Yeah, that's
TV
right.
acquire Victory, which some would have said is a surprise.
Correct.
So I don't know if we could. It might be just that the unpredictable is going to happen in the next sort of the next 3 years of this arc of sports betting and maybe just sports entertainment or gaming. And people always pontificate about the FANG type companies getting involved, or plenty of talk about all these possibilities that come with this space. But I'm not sure that anyone can truly predict what the next surprise will be, other than there's probably going to be a handful of surprises to come.
Without a doubt. And the big thing, like the one thing that I came away from 2020 just knowing is that there is a lot of capital that will be deployed around the U.S. sports betting and iGaming industry. There's going to be buckets of it, and so there's SPACs that haven't even don't even have companies yet that have already been announced in the gaming industry, and so now they've got 24 months or something along those lines to fill that SPAC, and so. Um, I have a feeling that there's just going to be more deals that are eye opening and jaw dropping, and because of the amount of money that people have made on take DraftKings. I mean, they were $10 at the beginning of the SPAC, and now they're 53. Penn National, you could have gotten Penn National at $4.50 in April, and now they're sitting at 100. So I mean, there's a lot of there's a lot of enthusiasm, and with that enthusiasm comes capital.
So I want to ask you specifically on the Penn National Barstool experiment, let's call it, because like I said, I challenge anyone who said they knew this was going to happen, and then if they did say that they knew it was going to be successful. And maybe I'm
Right.
not talking to the right people, and that was the case. But especially with what happened in Pennsylvania recently, with the hold percentage that's been obviously splashed around on Twitter and everywhere else in the news about how that business is operating there. Just tell me your sort of broader, high level view of some of the operations so far, that brand, their loyalty from their existing customer base, and what you see
Yes.
for them moving forward.
Well, yeah. So Barstool in December, or part, yeah, the Barstool Sportsbook. It was, I think it was 72 million in handle and 14 million in hold, with not much bonus credits. And the beauty of Pennsylvania, they lack some specificity in their reporting around kind of by sport, reporting on sports, but they do talk about they clearly delineate the bonus credits that are issued out, and Barstool didn't have many, and so they ended with a 20% margin on a 72% handle. Now, if you talk, yeah, and I talked to one guy out in Vegas, and I just said, "Hey, listen, could you have ever imagined having a month where you're holding 20%?" And I mean, that's really really hard to believe, um, and I think that what that has to do with, I really do think, and I'm the guy, I know I know there are sophisticated gamblers in the United States, but I am always the guy that says people overestimate um, the sophistication of the U.S. sports bettor. I think they often overestimate it, and especially us inside the industry. We understand odds, and oh my gosh, it's -10, it's -115, versus -110. The world's coming to an end. Nobody really cares, and so when you have a bunch of people that are signing up and depositing and just don't really care about what the odds are, you can get a 20% margin in a month, and I think that the margin as a whole since legalization, I think it's been, pretty healthy. When you look back at like the Oxford economics reports that were coming out by the AGA, and gosh, love the Chris Groves and the guys at Eilers and Krychek. Everybody was saying, well, there's going to be, what's Vegas running at? Oh, it's running at a 5% margin. So let's give everybody, let's assume a 5.5% margin or a 6% margin. Actually, the margins in the United States are massive. I mean, they're massive, and the reason for that, well, there's a few reasons, but the one is just that there's people are just such unexperienced, gamblers, and so when I look at other brands and I look at the true differentiation between the brands right now, it just feels like people are differentiating just simply on that brand and not necessarily in the product offering. The product offerings are pretty vanilla, and this is no offense to any operator. I'm probably going to get somebody who's going to say, "Hey, but ours is so different." but I mean, as a whole, though, Jake, I really don't find an awful lot of difference between the operators, UI, UX, products that they're offering. How do you put together a multiple, and what am I seeing when I sign in? What kind of bonuses I mean, all that stuff is pretty stock standard, but it's really the splashing of the marketing budgets that I find different. So, when I look at BetMGM, and they came in and they were aggressively saying, "Hey, we're looking to get a 10% margin." They have, and I'm sure they've spent a pretty good, pretty good whack of cash doing that. But the beauty of BetMGM is that they're sitting on their own tech stack. DraftKings did the same thing when they brought in SB Tech, and FanDuel has their own tech stack. So they're going to start to probably differentiate a bit, probably in 2021 and certainly 2022, depending on the types of customers that they're trying to target. But I think that there's a lot of opportunity that still exists in the product for each one of these brands, and so when we look at the market, there's a plenty of opportunities for these smaller brands that might just do things a little bit differently. Hey, I've got a slightly better payment processor. I think little things like that are probably gonna give operators a big opportunity.
So the underlying forces that are driving the US market then, let's say the players, now I can't imagine they're going to change sophistication overnight or into another calendar year. If anything, there's going to be more players across more legalized states. The operators, the product offerings, the transaction of a bet has been the same for hundreds of years. So, unless something drastically shifts on that front, might be similar. So going back to the market then, the whole percentage and just the volume and everything else, unless something changes, this might be what we're looking at longer term. And obviously 20% hold in Pennsylvania in 1 month may not be the norm, and it'll regress back to whatever the right number might be over time. But I'm yet to be convinced that this isn't going to be what it is, where we're at now.
I completely agree. I am shocked. Again, I am shocked on a monthly basis to see these numbers that come out of these states and see how casual, the market is. And also, just when you think about the maturation of a particular market, who are the first ones that sign up to these sports books and go bet? Well, it's the people who completely understand sports betting, right? So a place like New Jersey, all of those sophisticated gamblers, they're still either betting offshore, and they're probably never going to come back on shore, or they've gone to a book and they've already got a couple of apps. I think that on average in Europe, it's like every bettor has 3.5 or 3 or 4 apps that they wager with. I don't think that we're there in the United States just yet, because I think payments are a little bit of a pain in the ass and things like that. But when I look at 2.5 years of a market in New Jersey, I can't help but think that a lot of those sophisticated gamblers are either in it or they're never going to be in it. So who's coming in after that? It's the sports fans. It's the betting curious. It's the segments of customers that I'm not real familiar with sports betting. I don't know what this is going to look like, and those people are not going to be price sensitive. They're just simply not. They don't even know what price is.
Couldn't agree more.
So I agree. I completely agree with you.
Yeah.
And also when you take other stages, I mean, look at some of these other markets. If you take like for instance Colorado, Colorado in September, they had, I think it was, I think it was probably 95% of their net revenues, all the sports books net revenues came from parlays. I mean, it was crazy,
Wow.
crazy. I mean, and now it's like 40%. I mean, 45%. I mean, it's just, and the amount of money that is being distributed, by way of bonus credits and those types of things, it's pretty staggering. So there's a lot of hooks that are going out there into the market to try and, acquire customers. And these people just, there's a reason that the lottery player just goes to the lottery every single week. And they know that the chances are 1 in a million. But do they mind spending $5 on those lottery tickets? No, they don't. It's entertainment. And so I do think that sports betting is really going to be at that entertainment level for quite some time. And it's so novel. I mean, they're seeing it all throughout the sports media. They're seeing it everywhere they go. They're seeing some odds or hey, team A is -6.5 over team B. They're probably asking their buddies and asking everybody else, what the heck does that mean? So everybody is curious about this now because it is completely everywhere.
You're down in Kentucky, one of the global epicenters of horse racing, so it'd be remiss not to talk about horse racing, even in amongst all the things happening on the sports side and on the iGaming side and poker and everything else in the US at the moment. But tell me, what's your sentiment on things down there in Kentucky at the moment with respect to some potential changes that may come with horse racing? Because as we know, the US market is, compared to global standards, maybe a little bit stale when it comes to the product offerings and potential, capturing of more audience through innovative products, and even fixed odds isn't available here for those who don't know. So just tell me where the temperature is on horse racing at the moment across those things.
Yeah. So I mean, when you say stale, I think you're being very polite. So I mean, it's been. I think horse racing has pretty much stagnated between 10 billion and 11 billion per year for the past in wagers. For the past probably 7, 8, 9 years. Just hasn't done much. But 2020 has been a massive bump. In fact, if you pull the Oregon numbers on horse racing, I think year on year, up for the first 3 quarters of 2020 versus the first 3 quarters of 2019, I think it's up 40 or 50%, which is pretty staggering. And I think that just the New Jersey looking at fixed odds. I think there's going to be some money that comes in. I think some of the underlying challenges are really around that tote system, and the underlying tech. And without investment in it, the products really can't change an awful lot. You can go to one ADW or the other, but those are all going to be pretty similar. But I think that what we're seeing now and what we will see in the near future is some serious innovation around betting on horses. And I mean, this past year has been amazing for the ADWs. Not necessarily the Triple Crown days. I don't know if you know this, but I mean, if you take the individual Triple Crown days, and they they were slightly different this year because of COVID. But I mean, we had Belmont in June, and then the Derby, and then the Preakness, and those individual days were down year on year. But as a whole, way more people were betting on horses, than had happened in the past. The fixed odds opportunity that exists in New Jersey, and I think it's Dennis Drazen out of Monmouth is looking at how can you provide some innovation around fixed odds horse racing in New Jersey, which sounds pretty interesting, considering that there hasn't been any innovation in the betting on horses for the past 10 years. So pretty enthusiastic about it, and certainly when when you see the numbers, TVG's numbers, and also, FanDuel. I think FanDuel's got their own horse racing now. I think that, obviously they've got TVG, but I think they've got like a FanDuel branded horse racing site. So they're trying to get new customers in. I think, average age of the horse racing bettor is probably, plus, somewhere between 45 and 55. Average age of a sports bettor, is 10, 15 years younger than that. So I do think that there's, there is some work being done on introducing, the Sport of Kings to a little younger generation, which is great.
So did the industry just accidentally fall backwards into a 2020 type year, given COVID and all the changes and a mix of no sport happening as well as everyone staying home and so on? Because it seems like if it's pretty steady over a decade, around 10, 11 billion you were saying earlier, that seems to be the most likely scenario. And if that is the case, and extending beyond that, what does it have to do to capture, being in the right place at the right time, if we want to put it that way?
Yeah. I, you know, I would say I would probably say yes on them stumbling into this opportunity. I can't say that there was. I didn't feel like there was a lot of industry wide changes. Certainly, some operators were certainly taking advantage and saw an opportunity that didn't exist. But as a whole, it was probably more they backed into it than anything. Hopefully we're going to see things where I don't know if you know this, but FanDuel bought a track in, I think, Illinois, and so I think what we're going to start to see is the blurring of a lot of gambling verticals, horse racing being one, and it's rising tide lifts all boats. I think that horse racing is going to be one of those where the tracks. If you take Kentucky for instance, the tracks are the ones that are going to get the sports betting licenses. So then now all of a sudden money is going into these sports betting into these tracks. Offering a better experience. On the day, or a better mobile experience if you're wagering on mobile. So I do think that it has been quite a protective industry, and I think that with the influx of some capital, no different than the sports betting industry, I think that there's going to be some innovation and some opportunities for some of these operators to do things a little bit differently. I think that. I don't know necessarily. Like, it's really interesting that say Twin Spires has pretty much shelved their Bet America brand and just full on they're going to be called Twin Spires going into Michigan, which I think is a pretty interesting play. I think most everybody has heard of Twin Spires at some stage, whether you've heard of the Kentucky Derby or not, but that's a good brand. So now all of a sudden you've got this horse racing brand that's leading Churchill Downs in the online gaming space. I think certainly over 2021 there's going to be some, and it's really about resources. There's going to be a little bit more, and so hopefully tracks and ADWs and racing associations can really dig in and find opportunities.
It's going to be fascinating to watch just how it plays out, because like we were talking about earlier with back in 2017, you heard a lot of people talking about Boyd Gaming, MGM, a lot of these incumbent monsters in the gaming space out of Vegas and other places that had a pretty, strong hold on the industry called gaming generally. And then we saw DraftKings come along and knock them off their perch when it came to sports. Are we going to see something similar, do you think, when it comes to horse racing? Because I think if you asked, a few people now, they would say, yeah, look at Twin Spires, look at TVG with FanDuel and Flutter and that group, look at Penn National, obviously their existing involvement in horse racing. I know it's a little bit different because you have the licenses going to tracks in many instances, but I think there's some parallel there with a lot of those big gaming properties having access or market access in a lot of these states as well. But can you see another DraftKings type, even DraftKings themselves, without any horse tracks or great ties to horse racing coming in, or other brands, let's say, who don't necessarily sit in a good spot now, but just like we didn't think DraftKings or FanDuel were going to be number one and number two back then. Do you think there's a shuffling that's going to happen?
I do, without a doubt. And again, I'm going to go back to this. It's all about acquiring customers, and sometimes that the acquiring of customers comes through, either buying a track, licensing a sports betting license because from a track. I have a feeling that that the tip of the spear, which is sports betting, is going to be driving a lot of commercial decisions, and that will certainly influence horse racing. When I just look at places like California, or other states where there's a few tracks, and that those tracks are going to get licenses. What are they going to do? What are they going to do with them? Or is that the entrance for one of these major operators? TVG and FanDuel, I feel pretty confident they've got a good hold on what their U.S. map looks like, and how they're going to roll out in all of these states. There's what is PointsBet going to do? They might buy a track. And if you do buy that track, then you've got to run races on it, because typically there's requirements to run a certain number of races. So I certainly think that we are going to see some really interesting, again, bedfellows, not too dissimilar than the media companies and the operators, but also amongst the horse racing industry and sports betting. I can't help but think, I look at companies that are starting to, provide some innovation and blur gambling verticals like Equilottery, where you can buy lottery tickets, and it's actually, backed by the tote. Or you look at, there's some mobile apps that look a lot like a casino, but nonetheless, the odds are all done by historic horse racing. So I think we're going to start to see some really interesting connections and some interesting cross points where horse racing is meeting tech, is meeting sports betting, is meeting lottery. We're going to see a whole hell of a lot more of that, I think, in the future.
So do you have one or two items for the future that you're going to be keeping a close eye on as it pertains to the North American market? Obviously, people talking about Canada, so we can throw that in there. There's plenty of discussion around those big four states that we mentioned before, with Texas, Florida, California, and New York, and obviously the different verticals of gaming across horse racing, and then others that may exist. Obviously, mixing pools with poker is something that comes up from time to time, as well as the Wire Act and how we get a change there that might help the industry move forward. Is there anything specific that you're keeping half an eye on that is of interest to you at this point?
Yeah, and it's really just around. I mean, it's around. I'm an early stage business. We're at our Series A level. I'm really interested in major operators and major software suppliers and how they differentiate their products. And I just don't think that they probably, it's really hard to do that when you're that big. Turning an aircraft carrier is pretty difficult. I think a lot of the innovation that we're going to see in the industry, it might take a little while. It might take another year or 2 years, but I think we're going to see some really interesting companies that emerge that get gobbled up by these operators or get gobbled up by the software suppliers, so that they can provide something just a little bit different. And that's kind of the space that I'm playing at. And that's certainly a space where that we at Chalkline are really going to keep at least one eye open on.
So chalklinesports.com is the website, and I got to ask you before I let you go, what's the plan this year for the webinar series? I've tuned into most of them now, and awesome information, plenty of good data, plenty of predictions. People can go and watch that. That episode was a bit of fun, but tell me what that looks like, and how do people get access to those? Because there's a lot of great information in there.
Yeah, thanks, Jake. We had, our webinars are growing leaps and bounds. I think we had 1,500 people, come listen to our webinars in 2020. And they're short, they're 30 minutes. I think what we're about to do is we're about to branch out a little bit and bring in some guests. It's been pretty much me and Jason and Joe doing them for the past 30 odd episodes or something along those lines. But it feels like we're probably going to expand that and start to bring in maybe some super sharp guys like yourself.
Well, I urge everyone to go check it out. They're on demand, I believe, and you can go and have a look. And
they are.
I certainly tune in. You can tell just by listening to you know your stuff. You're into the data and the details, which matters certainly for the analytically minded people, who I'm sure plenty of people listen to this are that way inclined. So looking forward to that coming up this year, especially in an industry with plenty of noise. So we look to you to help us filter through all that.
Always, Jake. Hey, listen, thanks a lot for the opportunity. I love chatting with you, man.
It's my pleasure. We'll do this again soon.
Sounds good. Take care now.